The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index is trading at $60,875. Bitcoin down almost 7% over the past 24 hours. The CoinDesk Ether price ETX index is at 4,318. ETH is also down over 8%. And the new DFX, CoinDesk's DeFi index, is at 560 points, down over 11% over the past 24 hours. And joining us now to discuss the crypto markets is Greg Magadini, CEO of Genesis Volatility, a crypto options analytics platform. Welcome, Greg. So Bitcoin falling lower at the end of this short-term range that we're seeing. What do you see as Bitcoin's trajectory?
Yeah, so great question. Something interesting we've been seeing in the options market right now is that options are stubbornly expensive compared to realized volatility. So typically the relationship is between implied volatility and realized volatility. And the market was pricing in a lot of explosive up moves on the most recent rally. We finally got some sort of realized volatility materializing on this down move. But overall, I think the markets are still safe. We're still above key levels such as 60,000 in the Bitcoin space and 4,000 in the Ethereum space. And as long as crypto can hold these levels, I think volatility drops back down and options start to deflate and lose value to that.
Oh, Lawrence, you're on.
When we're looking at the options market, we're seeing a lot more activity in the put side of things. We're seeing far more put contracts being executed. Is that basically players selling those puts because of the high volatility and trying to basically take on a position that they feel won't go in the money and just collecting that premium, as opposed to them having an actual buying those puts and expecting the price to go down?
That's a great question. I really like this question. So what we've seen in the market so far, especially when we're decomposing non-block trade volume, we've seen sort of these far out of the money puts being sold by the retail public and sort of closer to the money puts being bought. So think of it in terms of Bitcoin, anything between 60 and 50,000 has sort of been bought by the retail public, and anything below 40,000 has been sold.
Sorry, can you, okay. Yeah, so I just, returning just to the general market. So we've seen Bitcoin just kind of go down recently, like over basically the last day. And some people are attributing that to China's latest crackdown. I'm just wondering if you would agree with that assessment, or if you think there's another cause that's just causing this short-term decline in price.
Yeah, to me, it's still within the realms of normal price movement, especially looking at how the option market was pricing everything. So the option market has been priced up here for the past, call it 2 to 3 weeks, and the actual movement of the market has been down here. So within sort of the normal standard deviations of the market, I still think this is kind of just a normal fluctuation, people getting liquidated maybe because of positioning, but I don't think anything has fundamentally changed at these levels. I think until we start to get below 60,000 and start holding below 60,000, I think that's kind of more of a fundamental change. But right now, I would say it's still within the realm of normal fluctuation.
So before you were describing a bear spread, are you seeing any bull spreads being placed right now as well on the upper side of things with calls? Do you think that we're seeing some sells of very far out of the money calls to finance the lower strikes? Seeing more activity.
Yeah.
In that
So
kind
typically,
of a trade.
Absolutely. So what we've been seeing in both the retail space and the block trading space is that call spreads are one of the most popular trading structures. And so block traders have been using Paradigm to block trade between kind of 70,000 all the way to 90,000, sort of those call spreads. And then in the retail public, you have the retail buying $100,000 and $80,000 calls. and selling the 120s, 140s, 160s. So the retail is really comfortable selling that far out of the money call structure and buying sort of the 80 to 100,000, whereas sort of the more professional trading audience is trading closer to the money, call it 70,000 to 90,000.